Good morning, good afternoon, good evening. Welcome to the Accendo Trader Group. This is our weekend wrap-up trading plan for Saturday, October 17, 2009. You know our blog.accendotraders.com. Effective video, technical analysis trading plans delivered daily. Our main focus here at Accendo Traders is we focus on effective trading plans to help us prepare for the next trading day. So our video today is just going to help us prepare for what's coming up in our next week. So the week that was, well, the market ended up not as much as we could have. We did have a retracement on Friday that kind of stole a little thunder. But again, it is another week. All 10 sectors did end up positive, so we certainly need to be happy about that. So as we talked about last week, what is our driver this week that passed? It was the earnings. Earnings jumped right on out, and the market reacted to what we had. Now the question is, are we going to start selling the news, or are we going to be excited and surprised? So Tuesday after the close, Intel jumped off and had real upbeat earnings and upside guidance for us this year, and the market really took off in the evening, and we were already up 180 by the time we got off. But the other thing we had in conjunction with after the bell Tuesday was J.P. Morgan on Wednesday morning, and that really led to a really good Wednesday session. Then Thursday we had Goldman and Citi, and we really kind of had, although both beat, Citi was expecting a loss, but they didn't have as big as losses as they received, and Goldman beat, but the whisper numbers were $6. And so we had sort of a sell the news. So again, you know, our traders now expecting more, you know, because remember, Wall Street's doing great. We're Dow 10,000, woohoo! Or are people going to be satisfied? So Goldman and Citi kind of left us underwhelmed, and then we had Google on Thursday that really didn't do much for us. We also had IBM after the close Thursday, but IBM and GE fell on Friday. So we had all these earnings after JP Morgan, after Intel, that just kind of, you know, didn't spark the market like Intel did and JP Morgan. Also this week we were surprised with the retail numbers, and the dollar hitting 52-week lows also helped the market go higher. Isn't that kind of weird how a low dollar means good for the stock market? So this week on the economic calendar, you know, we have a couple things, but I think we can still expect to see earnings be the driver of the week. So what do we have? Tomorrow, on Monday, we don't have anything on the economic calendar, but we do have Apple after the close. Apple after the close on Monday, and you can see this week we've got Caterpillar, Coach, Peabody, United Healthcare, SanDisk, Yahoo, Morgan Stanley, eBay, Nucor, Potash, Amazon, Boeing. So we certainly have some more big companies that can move the market. And we did have a split plan announced, and we'll see how that plays out. So as we begin to look at our charts, here we are on the down, and we've continued the patterns, swing high, down, swing high, down, swing high, down. And last week when we were coming into the beginning of the week, we were basically right here, and we were saying, what was the market going to do? And you can see that what we did kind of touch our swing high, and we wanted to know which way the market was going to go, and we did make a new swing high, which is great. Also look at the volume at the end of the week. So we had some volume on this push. That's certainly great. When we switch over here to the NASDAQ, what's a little concerning is that we're not going to see that dramatic swing high that we see with the Dow. We did go higher, but it's not as drastic as it was on the Dow. Now the S&P is going to mimic the Dow. You can see again we have a nice clearly defined swing high on the market. Volume picked up on the end of the week. Now let's take a quick moment and just look at our long-term moving averages, and you can see that we are well above the 100 there, so we really don't have to worry about that. Another thing here you can see on the NASDAQ that's really positive is where did we bounce? This is the 500 moving average. So when we came down, we touched the 500 move up. And the Dow. So we haven't seen the 500 yet on the Dow and the S&P 500. Now let's go ahead and take a quick look at our monthly charts, and you'll see on the Dow, we had this big drop as we move up. Now, what's interesting about the Dow is as we moved up, the volume died up, and now we're having our first uptick here in October for up volume. Now, what we've been talking about is this 20 moving average on the monthly chart, and now that we're above it clearly, it makes sense for us to run up here and test the 50 moving average. But when we look at the NASDAQ, you can see we've already through the 50, and we don't have that same strength moving us forward. This could be why we don't have that dramatic swing high on the NASDAQ. And you can basically kind of see where we're at. We're at this February low of 2008. February, March. So that certainly could be, if we can break that, we can move a little bit higher. On the S&P, we're going to see the same thing as the Dow. We have broken the 20 clearly, and it does make sense for us to make the next move to go test the 50 moving average as resistance. As we look at what's going on the inside, you can see last week we had really good breadth. Breadth is a measurement of the volume, up and down volume, selling or buying. Above 50 is bullish, below 50 is bearish. So we had pretty much good week last week. This week, you can see we had pretty much a good week. What's interesting again is with that Friday down day, the volume did increase and breadth was negative. And really one of our first really big negative day on advanced decliners since about 2 weeks ago. So, again, not predicting anything. And we see that usually our Mondays are our blah days anyway. So the market really could be sitting and waiting for the Apple earnings after the close on Monday. But overall, I don't think we have anything really to worry about here on the internals. And again, we've had a great uptrend. And remember, the trend is your friend. So as long as the market is going in this great uptrend, making new swing highs, that's the way you have to trade it. We're going to take a real quick look at our sectors, and you can see energy still looking good, oil still looking good, our metals still looking very good. Gold, however, kind of hovering, kind of in a range, but obviously it's good, but in a range. Weakness, one of our weak areas right now are the casinos. Take a look at the casinos. Look at that downtrend, and look at us come test the 50. Now, we popped last time. What will we do from here? On the flip side, retail looks very good. Shipping looks pretty good. And our computers still look pretty good also. So again, these are some good sectors, and all you want to do is pull up these sectors: oil, steel, gold, casinos, retail, shipping, and computer hardwares, and find some good companies in those areas. I'm going to do things a little bit different. I'm not going to go to the educational portion this week. What I want to do is talk about or answer one of the questions I always get, and that is, where to get good advice. And I want to show you where I am. This is where you can get great live professional trading advice. This is a great trading room. And what I'm showing you right here, and you're going to get a call out. There's going to be a little link that you're going to see in a second that takes you exactly to this page. And you can see, they are profitable. And they have a system in there. It's about protecting profits. It's about ending the day in green. It's about taking your profits and doing, X amount of short trades to get to your end of the day. But what's also important is that there are big traders in there are small traders in here. This guy's been trading for years. He calls his trades out. And for his track record, he only trades between 10 to 20. So although some of you might say that's not a lot of money, although are you making that much each day? But what's important is that you can trade more contracts. And if you do the math with futures and trading the YM, you can see that this is basically 3 contracts per trade. So click on the link. or type in the link there for you and go ahead to this site. And this is definitely the place to be for futures traders to get great live professional trading advice. I am in here. And trust me, I have sworn off paying anybody for anything, but I was sold on this trading room. And real quickly, I just want to show you a futures broker. You can see intraday trading accounts as low as $500. For our small account people, futures is the way to go. I'm going to put a video out about futures versus stocks and options so that you guys can see the advantages. But click on the link here to see a great broker for futures.